For 2 straight weeks, we have now dealt with this positive impact in the crypto market. Something we've been waiting for quite some time is for basically institutional money to get their asses back in gear, to get back on the right path of inflows. And that's exactly what we've been seeing. And in fact, what this last week was the highest net flow week we have seen in probably the last month. Almost $1 billion of inflows in terms of BTC. Now, this is a big reason why we look at the BTC charts. It's made some nice strides forward this week. We look at the ADA charts. We made some nice strides forward this week. And the thing is now that we are seeing some more positive flows from institutional money, the sentiment in the market is changing. Right, we got in this period of bearishness where people were basically just like, "Oh yeah, institutions are just going to keep dumping on our head, dumping on our head, dumping on our head." You guys can see that. For example, on May 1st, you had every single institution dumped to the total of $563 million. That's tough to absorb as a market. You know what's even easier for the market to absorb? Inflows. Inflows are a great thing for us. Now, what's interesting about this when it comes to ADA is I've said that ADA is very much impacted by retail money, and retail sentiment surrounding ADA. I've seen people talk about this, wasn't very good. Some people were just liquidating their bag of ADA. They're saying, "I'm done. I'm moving on to something else." And right now is about that point where ADA historically makes big moves versus BTC. Now, I'm not saying it's going to be a 20% daily candle like back here, but it wouldn't surprise me if the market sentiment is conducive towards these pumps for ADA to gain some major ground here. Okay, when we look at the ADA BTC pairing, which I don't have pulled up here and I should have, BTC, you guys can see that ADA's kind of putzed around down along this bottom line here, okay? And historically speaking, it tends to make a hard bounce off of here. You guys look back here at this trend all the way back here last market cycle, and each time ADA's come down and it hit this line, sometimes gone below it, it's made a hard bounce right off of it. All right. And right now, ADA is doing this same thing. You guys can see the hard bounce essentially taking place here. And this confirmation of direction for ADA may be what pushes us back into some of these better spots in the charts. Yes, we've been in much better times this year. Yes, we've had a much higher dominance versus BTC, but don't sleep on the impact from institutional money. It may seem kind of like a weird connection, but alts begin to gain ground now. Now is the time where you should start to see assets outpace what BTC is doing, especially as retail starts to get into the space in a much bigger way. This is where, again, ADA can make some of those bigger moves, where ADA will gain dominance versus BTC, where it will cement itself as a dominant asset in this space. Now, I had people ask me in my projection video yesterday about providing more data and why I think ADA is going to get up to some of these price levels. Last market cycle, ADA did a 150x from the bottom. With rainbow regression curves, law of diminishing returns, it should do somewhere in that like 40 to 50x range from the bottom. Now, this is not a guarantee. This is not financial advice, but that's just math. That's typically how these things work. And where things really get exciting is if ADA gets that big adoption, which I think it will. I think right now, all the pieces of infrastructure that have been built and put in place during this market cycle, if that does get adopted, there is not going to be any stopping Cardano, right? We don't deal with downtime. We don't deal with exploits. We don't deal with high gas fees. We don't deal with scalability issues. Those things are not going to be a prevalent competitor that these other blockchains have to deal with within their own infrastructure. All right. Hopefully that makes sense. But I'm very excited. I'm trying not to get too excited because I know these summer months, they can be boring. They can be just kind of sideways chop. It wouldn't surprise me if that's what we have. But the thing is things have been happening slightly different in this cycle, right? This institutional money flowing into crypto may send prices on a run a little bit different than what we've seen in the past. Retail coming back early may make prices of retail-driven assets like ADA move a little quicker than they have in the past. That's what we need to be watching what the money does. I know yesterday, for example, Tether minted another $1 billion worth of USDT. I'm not sure if that was from inflows or what it was, but we're seeing this happen at an accelerated rate. I think it's like 34 billion USDT that they've minted this year. And it's because of this heightened levels of adoption that are taking place. This heightened level of inflows, this early mass adoption. I don't want to say we're into mass adoption yet, but we're kind of in those early signs of it. And the wave is just going to get bigger. All right. If we've experienced this early on in the year of the halving, imagine what it's going to look like now in this time post halving, in alt season, in 2025, which historically speaking should be the highest year of adoption. So I don't want to keep ranting on, but don't sleep on all these things together. All right. Yes, I understand that some of the macro stuff isn't that great. Sometimes that doesn't freaking matter. All right. So I appreciate you guys. I hope you enjoyed the video. Let me know your thoughts below, but have a great day. I'll catch you guys in the next one. Take care.